Let me create an example to illustrate the first. Let us say we have an income statement like this, okay, that sales was 40 lakhs, purchases was 20 lakh, and everything was in cash. Apart from this, there was one more journal entry which was called, let us say, depreciation on existing asset was rupees 5 lakh. Depreciation was 5 lakh. There are 3 entries now: purchase, everything in cash; sales, everything is in cash; and depreciation of 5 lakh. Now, how would my income statement change with this information? Will income statement change? What would happen in income statement? Yeah, tell me, anybody?
We will add the depreciation.
We will add one more expense. Rather, we will subtract 5 lakh rupees, depreciation negative 5 lakh rupees. And now my profit is how much? What was 20 lakh earlier? Now I will show a profit only of 15 lakh rupees. Let's call it net profit. Right? Now this is how my income statement will look like. Okay. The reasoning is as follows: that when we subtracted this expense called cash, did I pay any cash in this year? Sorry, depreciation. Did I pay any cash in this year for depreciation? 5 lakh rupees?
No, sir.
No. Will it create an outstanding? No. Basically, this represents an expense for which cash was already paid somewhere in the past. We don't need to pay cash any longer, right? When we purchase the asset, then in that year itself, the amount would have gone in CFI. When we are showing the amount of depreciation on those dates, we are not paying any cash. Let me take one more entry. Let us say I have one entry called bad debts expense, bad debt expense of rupees, let's say 2 lakh. What happens in bad debts? Account receivable falls down and you create an expense. Do you ever pay cash for bad debts? No, you don't. Would you pay for in cash for bad debts in future? No. So basically, there are certain items in the income statement which do not involve cash. They are called non-cash income or expenses. Now, if let us say somebody is asking me that what was the cash flow from operating activities this year, I can straight away say that, oh, 15 lakh was profit, but of that, this was after subtracting 5 lakh of non-cash expenses. So my cash would have been 5 lakh higher. Basically, my cash flow from operating activity would have been 20 lakh. What did I do just now? Basically, I said that 15 was my profit itself, but this profit is after a taking hit of 5 lakh of non-cash expense. So let me give an example for this. Let us start with an opening cash. Let us say the business has started with, let's say 30 lakh rupees of cash. Okay. For the time being, let us ignore these two items, CFI and CFF को ignore कर देते. Let us say only operating activities happened. Why am I assuming this? So that you understand that if cash changes, it is only because of operating activity. ठीक है? Let us say these are the two things that happened. आपने सेल किया 40 लाख का, आपने परचेज किया 20 लाख का, और डेप्रिसिएशन का खर्चा दिखा दिया 5 लाख. Then this is how your income statement will look like, which is right in front of you. If my question is that, can you tell me that how much cash you will have at the end of the day? Let us say this is where your accounting period ended. आपके पास cash कितना बचेगा? Can anybody tell me? दित्या बताओ. How much cash you will be left with? Calculate करो. 30 you started with. These are the only two things happened, and apart from that, a depreciation expense. Cash कितना बचा होगा आपके पास?
50.
50 कहाँ से आ गया? What did you do to arrive at 50? Explain.
30 plus 40 minus 20.
Basically,
you don't
40 you
include
got because of sale, 20 you paid for purchase, and this 5 lakh you ignored, right?
Yeah.
Why did you ignore?
Because depreciation is not a cash expense.
Because you didn't pay cash for depreciation, right? Now, this is exactly what we are doing. That our cash impact, cash flow from operating activity, if you wanted to calculate, it is going to ignore that there is a depreciation, right? Now, if I start with 15, can I arrive at 20? How can I arrive at 20? I can say that in this 15 lakh of profit, इसमें एक 5 लाख का ऐसा expense हमने subtract किया था. We had subtracted such kind of a 5 lakh of expense which did not involve cash. So can I find out cash impact? Yes, I can. What can I do for that? I will write net profit and I will reverse the impact of cash expense. Non-cash expense. So ये जो 5 लाख जो हमने पहले घटाया था उसको अभी add back कर देंगे तो आ जाएगा ये number. We will get this number. ये समझ में आ गया? That's all we are going to do right now. We will say that in the non-cash item, you add all the expenses and subtract all the non-cash incomes. That's what we are going to do. So point number 1, that write the net profit here. In our example, we will write our 15 lakh net profit here. Let's write 15 lakh here. And then if there are non-cash expenses in the income statement, add them back here. If there are non-cash income here, subtract them here. Why would you do this? It's not कि आपके पैसे जाते हैं non-cash expense या income में. It's just that this 15,000 when you wrote, this one was after subtracting an expense of 5 lakh rupees. But cash did not fall. So how will I find how much cash came in or went out from the business? If I add the 5 lakh rupees back, that's how I would have gotten my CFO. ठीक है? लाइफ का सबसे कंफ्यूजिंग पार्ट चल रहा है. चलो थोड़ा सा just to motivate you all further थोड़ा सा एक और बता देता हूँ. In general क्या होता है ना, that in our accounting class there are 3 stages where people give up. Okay. One stage is step 0. जब वो आते हैं there itself their mind is finance अपने से नहीं होने वाला. Let us focus more on account marketing or something. Basically when students enter, then itself they are in the give up zone. Second step they give up in accounting is when we introduce the debit and credit. They just get puzzled. अरे debit अच्छा है कि खराब? Just tell me straightforward. This guy is saying that it's neither. If you have passed both of these hurdles, this is the final hurdle coming to you. If you cross this hurdle, then there are no further hurdles. That you will always be able to understand, not only understand with what is going on, but also why it is going on the way it is in accounting, at least. Whenever a financial statement is there in front of you, now you are logically as strong as a chartered accountant is. Only that chartered accountant knows most rules and regulations. But as far as conceptual understanding are concerned, you are at the same point. So that much of a strong outcome I'm promising. They study for like 5-6 very dedicated years, and you are like with our Disha and thing, not even 3 months, right? So you understand that what strong takeaway you are getting. So in this strong takeaway, brace yourself a little bit for an impact, because right now I am trying to now think in a reverse manner. What is reverse? Basically here now our objective has changed. What is the objective now? I want to find out that how much cash I generated from my operations. I am right now interested only in finding out cash kitna aaya. That's what CFO is all about. Now for that, I told you that there is an indirect method. Now what is an indirect method? Indirect method is that indirectly we will find out how much cash came into the business. I will start with the net profit itself and I will adjust all those reasons which resulted in either non-operating thing or non-cash thing. That's all. So one such example is depreciation. When you are showing an expense of depreciation, then you have not paid any cash. It's just an expense. It's just a book entry. So if somebody told you that everything was in cash except for depreciation, and net profit was 15 lakh, and I want to ask you that how much cash flow from operations you generated, then you will simply say 15 lakh to profit ही था, उसमें 5 lakh add back कर देते. Why 5 lakh adding back? Because when we created this number, this number was after the fact that we subtracted an item of 5 lakh rupees. उसके बाद 5 घटाने के बाद 15 बचा था. This 5 did not involve any cash outflow. That is why my cash outflow or inflow would have been after ignoring the fact that there was a 5 lakh of profit of depreciation. Sorry. So how do you ignore an expense? How do you reverse the effect of an expense? Expense income statement में subtract किया गया था. That is why to ignore it, you need to add it back, right? That is all that we are doing. यहाँ तक समझ में आ गया, then rest of the things should be a cakewalk. Relatively speaking, थोड़ा सा there are some more things to do, but yeah, at least intuitively, that's all we wanted to do. That we are adding this expense because we want to say that we want to reverse the impact of an expense. That is why we add back this 5 lakh, and we would have ended up saying that 20 lakh was my cash inflow from operations. Okay, before we move forward, any questions up till there? समझ आ रहा है? दीपक समझ में आ रहा है?
Sir, I had a question.
Yeah, go ahead.
Sir, why are we using the indirect method? Because we are starting from a wrong number and we are correcting it. Instead, we can just use the direct method, right?
Good question. Anybody who would want to give an intuitive answer to this? What do you think? Any reason?
Probably because we have already made the balance sheet and income statement. We want to
So
use
you
it
could
to-
reproduce it. His question is that you could simply reproduce it, right? Things would be, if anything, things would be slightly even simpler. Is the question clear to everybody? What are we trying to discuss? He is saying that why are you making our lives miserable? You could have reproduced it. Why are you feeling it against your ego? That just because that you are an accountant, you need to sound very sophisticated or something. The point is pretty simple. Let us say if we have an income statement which looks something like this. Let us say an income statement which looks something like, let us say purchases, subtract, by purchases I mean COGS, subtract 20 lakhs. Then let us say sales, add 40 lakhs. Let us say rent, subtract 35 lakhs. Then let us say what else? Let's say salaries, whatever lakhs. Let's say 12 minus 2 lakhs. Let us say income from interest income, positive 3 lakhs. Then something else, blah blah blah. Some 7-8 more items. And then there is your cash flow statement. Cash flow statement is looking like sales 35 lakhs. Then purchases 18 lakhs. Then your rent, let's say 22 lakhs. Then something else, whatever, interest, let's say interest shouldn't come here. Let's say salaries 5 lakh. Basically, if you look at this information and this information, what are you gaining? What is your understanding? You will end up into this game. You will go on comparing number by number. That this much is there in the income statement. What is it in the cash flow statement? Did we pay it in cash? What is the idea behind cash flow statement? What are we going to do? Let me tell you that when we come to interpretation part, soon enough we will come to interpretation part, but let me give you a glimpse. Basically, the glimpse is that if you are not generating enough cash, or if you are generating enough cash, how will you get to understand? And how you will get to understand that where do you want to improve? Basically, the idea is that are you losing too much of cash because of your operations, or are you generating enough cash? That's one intuition that we would want. Similarly, are you very aggressively investing in your long-term asset, or are you too conservative? That is where has your cash gone. Similarly, financing, that are you taking too much of a loan, or are you repaying your loans or repaying your equity, or are you taking too much money from financing activity and financing your loss-making operations? This would be the ultimate takeaway from the entire table. Now, to do this, from CFO, we already know that if we let us say that you have generated 35,000 of cash, 35,000 of cash, and you say that this is not good enough, what are you going to do? Which activity will you improve upon? Basically, for that, you need to look at the detail of CFO. That's what you need to do. Let us say somebody says that your CFO is not good enough. So you will have to control some component parts, right? Now what we are saying is that let us say in the component parts, this is the kind of statement you have. Sales mein itna hai, purchase mein itna hai, isme itna, blah 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 blah. Then it will be very difficult for you to interpret what is going on. Why? Because one is your operations itself, which is given to you by income statement, and one is your cash policies. There are two parts within this. अगर आपको cash flow from operations improve करना है, then there are two options available to you. One is that your cash policies itself. For example, let us say when you sell, you are selling it on credit, but when you buy, you are paying in cash. Then even though your business might look profitable, you might not have enough cash. बहुत confusing बातें कर रहा हूँ आज. ये statement समझ में आया? I'll repeat. What did I say? Let us say you want to control how your cash is behaving as far as your CFO is concerned. That is your objective. So I said that you will look at the total. Then let's say you got that the total is not good enough. Now I need to take certain decision. My pointer to you is that this decision could be towards two respects. One is improve your performance itself. That is start selling more, start buying less, start paying less salaries, or control your rent expenses or whatever. That is one part in which you can improve your operations. And other part is how you are managing your cash. That is one thing is, for example, a credit policy that you have adopted. That let us say when you are selling, you are selling everybody on credit. But when you are buying every time on cash. That means what? That even with a good performance, your cash is still not behaving properly. Is it possible? Basically, what we are saying, the only two things I said is that if you want to control cash, then you need to control two things. One is your operations and one is your cash policy. ये समझ में आया? Now, to do this, to control operations, we already have a perfectly looking statement called income statement. If I have a statement like this, then within this statement itself, both of these are mixed up. इसमें दोनों के effect mixed up हैं. That this 35 lakh of sales, is it there? Let us say you don't like 35 lakh of sales. Is it there because you couldn't sell enough, or is it there because you are not selling in cash? What is the reason? Is it clear to you? Now you will need one more statement to compare. So that is why we said is that if we want to improve your operating performance, we operate for operating parts, straight away refer to income statement. And only for the cash decisions, that is other decisions which are not in cash, your credit policy or the aggressiveness with which you are purchasing inventory, or let us say your most of the expenses are non-cash expenses or vice versa, for this you refer to CFO. This breakup will be very clearly available. So it is for this breakup that we are preparing cash flow statement using an indirect. ये समझ में आया? Okay. So now that unfortunately you are like a real good analyst and you want to understand the business, that is why you have no option but to prepare cash flow statement using an indirect method. Once we have prepared it, you will see that a very new type of information gets clear to us in a fingertips, which would not have been possible if we had this kind of complicated statement. To prepare this is pretty simple. Conceptually also speaking, this is much simpler, but for decision making, this is a nightmare. For decision making, if you want to use this information, then you wouldn't understand that whether I should fire my sales team, or whether I should give bonus to my sales team, or should I go and correct my legal detail that don't give those so much of credit. What should I do? So to get this point of understanding, which is the main idea behind cash flow statement itself, that is why we prepare it using an indirect method. ठीक है, समझ में आया? That is why what we will do is that to begin with itself, we will start with a profit figure, and then we will say that go ahead and adjust for those reasons why our net profit is any different from CFO. And this is the reasons that I am trying to explain. One set of reasons would be all non-cash items in the income statement. One reason would be all non-operating items in the income statement, and one reason would be your changes in working capital. Okay. So right now I was I was in a process of explaining the first one, that if there are non-cash items, then what do they stand for? They stand for those items which could have reduced my net profit if they are expenses, of course. One example I gave was depreciation. The depreciation 5 lakh basically reduced my profit. If this depreciation was not there, I would have shown 20 lakh ka profit. If this depreciation was not at all there, I would have shown a 20 lakh ka profit. Whereas what am I showing right now? I am showing only 15. So how do I convert 15 to 20? I just reverse the impact of this expense. That's what I had done. Okay? Yeah, go ahead, Bharat.
So this is prepared from T accounts.
No, how it is prepared, I will tell you later on. So right now, just try to logically understand how do you prepare it. It is relatively simpler than this. The main focus point I want all of you to remember is that do you logically understand? ताकि बाद में आ जाए तो वहाँ पे लिखा रहेगा ऐसे. If you open any company's cash flow statement, why don't I do it for Tata Motors? Let me do it for Tata Motors. Tata Motors. ये क्या हो रहा है भैया? I need to attach my keyboard. Tata Motors cash flow statement. You may have thought कि ये teacher हमको बेवकूफ बना रहा है, but if you look at this statement, it's not only Tata Motors. It's not that Tata Motors से मैंने कुछ पैसे लिए हुए हैं and they have prepared it in indirect method. Everybody prepares it in indirect method because that's what makes sense. Look at where they started with. They started with profit and loss for the period, the first line itself. And what does the next line says? Adjustment for. Okay. Okay, this is one thing that I think I should have told to you long back, but let me tell it to you right now. If you know this already, good. If not, listen to it very carefully. In accounting, especially when you are doing financial statement, whenever you see the numbers in bracket, it stands for subtraction or negative numbers. For example, this 73 here at the bottom, you see this 73. Basically, here they want to say that subtract 73.03. Okay, this one is a negative number, that is negative profit. That means the company would have suffered a loss of 7,289 crore rupees. Okay, so whenever you see the numbers in bracket, they want to say negative number. Okay, so now you see that in a negative number, which is a loss, they are adding 3,000 something. This 3,000 something denotes what? Basically, it is depreciation and amortization. Where they would have found this, they would have found this number in the income statement of Tata Motors for that year. So similarly, we will adjust for all these headings. That's what these adjustments are for. These next few lines that you see, they are all adjustments. Adjustment for what? Basically, that's what I'm trying to show here, that in nutshell, there will always be adjustments only for these three reasons, A, B, and C. What are A and B? A and B are non-cash items in the income statement and non-operating items in the income statement. That's what they stand for. Okay. Okay. So let us go ahead and do this. So basically what we are saying is that we want to be a stunt man. And what do we do as a stunt man? We don't do something very simplistically. We do it something naak ko seedha pakadne ke bajaye, we will hold the nose some very twisted manner, and we will say that when we want to calculate CFO, we will start with net profit, and then we would start adjusting all those reasons why it is not. One such reasons is, so I will say adjustments. One such reasons are found in income statement. They are non-cash expenses and incomes.